Welcome back to another Stock Market Open live stream. Today we have Tesla deliver numbers, which should be out within the next, oh gosh, really anything, like 30 minutes or so here. Another thing to pay attention to is BT Sizzles. Take a look at BT Sizzles. So this did something incredible yesterday. I was watching this on the 5-minute candle, and I want you to see this on the 5-minute candle. Yesterday, I'm sitting here in the office working on the computer. And as I'm working on the computer, all of a sudden I look over and I see, I had it up on the 5-minute, and all of a sudden Bitcoin drops exactly, well, almost like that is like pretty dang much exactly, to this trend line here. And I want you to see what this trend line is. So you zoom out to the day chart, and then you can actually see this trend line. All this is the run-up from about February 9th to the run-up on February 26th to the low on March 20th. Take those 3 points, and you have the trend line that yesterday we perfectly dropped to on the 5-minute. Now, the scary subsequent part of that is we have this little unfortunate drop below that figure right now. So we're kind of below the trend now. We're trying to break out below. Not great. But you know, we know BTC before the halving, or some like to say halvening, is pretty volatile. So we shall see, but this is definitely something I'm paying attention to. Obviously, we got the 69 level here. So when we zoom out, we've got the previous all-time high as a blue fibby. We've got the trend line, and then we have this upper trend line that doesn't have as many good points, but you could grab the top of the 28th of March, the 26th of March, and the 14th of March, and that'll give you this sort of convergence trend that you're getting. And now the question is, do you break up to new all-time highs or not? Well, we shall see. So, okay, we do have, this morning, we have Jolts data coming out at 7 a.m. So it'll be 7 a.m. when Jolts data comes out, along with factory orders, durable good orders. Yesterday's ISM figures, I mean, we covered it live. They were a little on the warm side, and so it actually led Treasury yields to take off even more. I mean, we went back over 4.3 on the Treasuries. Now we're sitting at almost 4.4 this morning, which is crazy. So we're sitting at 4.373 right now on the good old Treasuries. So not great on the 10-year. It's a little more aggressive. One of the reasons for this is we are seeing rate cut bets for June finally get cut. So yesterday, if I look correctly, yesterday we had, yeah, here it is. June rate cut odds fall below 50%. June rate cut odds dip below 50% as strong ISM data sinks in. Bond traders priced in less policy easing by the Federal Reserve this year and set the odds for a June cut at less than 50%. That was like 70% a week ago. So a sell-off was already underway in the bond market, blah, blah, blah. So, but yeah, basically we know why. The economy is essentially still managing to get through this period of excess savings spending. Consider that a hyphenated. Excess savings spending. So the spending of excess savings. That excess savings has hung out a whole lot longer than anybody could have possibly imagined. And it's also propped up by a strong jobs market. And so what you have is, unfortunately, some of these inflationary figures that are just coming in hotter and hotter and hotter, which isn't great. So this is the ISM figures, though. Let me grab them from yesterday. Just want to take another look at them. That was yesterday's March data. So keep that in mind. That wasn't a January or February report. That was a March report. So again, the manufacturing prices paid, new orders, and employment figure. Something to pay attention to, be watchful of. The market clearly moved on that. We shall see how things move from now on. Okay, so as far as the data releases that we're looking for now, we're looking for Q1 Tesla releases of deliveries. I want to get the analyst compiled target here. All right, here we go. So the compiled target, not the actual release yet. Compiled target was from Martin V over at Investor Relations for Q1 was 431,000 on a median or 443 on an average. So you're looking for somewhere between that. And if I go to Tesla Q1 deliveries 2023, let's see here. We were at 422,875 were the previous Tesla releases. So we're gonna see if I can drop this into here. Yeah, let's get. I wanna go ahead and throw that email up on eHack. It'll just take me a second to do it. So we'll go ahead and put it over there, and that way we have it. But obviously today that's going to be a major catalyst for Tesla. I don't think it's going to be a market catalyst, but one thing that will be a larger market catalyst will be the fact that you did just see rates go up at 20 basis points again. And that's becoming somewhat painful, mostly because what you want to get away from really is these excessively high practical interest rates, right? What's a practical interest rate? Well, that's your mortgage rate, your auto financing, whatever. That's sort of a practical interest rate that you can deploy or end up paying. As far as the FOMC rate, well, I kind of consider that the non-practical interest rate. That's sort of what guides everything, right? The treasuries, the bond markets, they sort of move around that as a result of what you're able to earn on your money markets. So that is very interesting. And that just shot up 20 basis points. So that means car financing just got a little more expensive. Home financing just got a little more expensive. So every time that 10-year moves, even credit cards, every time that 10-year moves, you have a lot of people who end up looking and going, dang it. I remember, oh man, this was like 2014. I was I was buying a rental property, and the lender's like, all right, let's, you can lock your rate. And I go, yes, let's lock the rate. And he says, you know what? I don't think there's a big hurry. Let's do it tomorrow. I just left the office. And I go, I'd really like to do it today. He's like, it's not going to change much. The next day, my rate shot up like 3/8 to 0.5% or something like that. I don't even remember what happened in the market. But it's the 10-year moving. And all of a sudden my payment was like $180 a month higher. And I'm like, are you now going to pay the extra $180 a month? Of course the answer is no. Now, whatever, I bit the bullet, but still I was like, So those interest rate moves can be really annoying for people in sort of the practical world. So anyway, that'll obviously be Tesla's big old catalyst today. And again, I'm trying to put this up on, there we go. Okay. So if you actually want to see, I think I just got it up. All right. This is, let's see here. Okie dokie dokie dokie. On ehack.com, I just put the email from Investor Relations. I guess I should probably label that Tesla. Hold on a sec. I just want to actually Whatever. It just shows you the number. I'm trying to get the, what's it called? Well, whatever. The website's going to take me a second. But anyway, while we wait, we'll be watching Bitcoin, and we'll be watching the Tesla sticks here. I'll get this fixed on here. I'm trying to get this to actually show up appropriately. There we go. Okay. There we go. Put the darn thing up correctly. And there. I think that's better. Okay. So we're going to put the email up from Tesla. Then we're going to put up the last year's data. So the number you're looking for is going to be from last year, and that is vehicle production at 440,808 and deliveries at 422,875. So that's the number you want to beat. So that way you could say, hey, look, we have year-over-year growth at Tesla. That's a big deal. You really don't want to be year-over-year negative because it really screws up your PEG ratios. So I'll write this down. IR email with analyst consensus delivery estimates. And again, that'll be out within the next 30 minutes or so. Okay, good. And then this was last year, 2023 Q1 numbers. Okie dokie. So now BTC under 66 today. I do want to see some larger movers today. I am noticing ARM is down 1%. Now yesterday ARM was up about 1.5%. And one of the things that I think is interesting here is I personally am under the belief that at some point we're going to get some form of AI correction. You know, I saw somebody quoted an investor email and article from the Wall Street Journal, and they're like, oh yeah, people are spending, what was it, something like $40 billion in AI chips to produce $2.5 billion or something like that in software revenues. Actually, I think it was $2 billion in revenues. I want to see if I can find that Wall Street Journal piece because that was quite interesting. But the idea, obviously, is that, you know, those $2 billion of software revenues you can do over and over and over again, and that you really need to set up the infrastructure just once. But boy, I'll tell you, it's kind of wild to think that there is this possibility. It's going to be a while before AI is like super profitable for some of the SaaS businesses. And then that becomes scary because, okay, well, how many businesses have run up on AI and the actual profitability of it doesn't end up showing up? Obviously, this is why the whole picks and shovels play has been so interesting, which is your chip manufacturers, TSMC, the ASMLs. Those have obviously been doing very well. Okay, so let's see what else. Okay. Okay, so there we go. Just throw this up really quick, get that done. There we go. Okay, finally. Okay, so I finally, if you refresh ehack.com right now, it's actually all correctly up there. All right, now all we're waiting for is the release of 2024's Q1. Now, there's also some talk about oil prices moving. Let's see what oil's doing. Yeah, it looks like Brent's moving up. You're now at a 5-month high. You're sitting at about 88.55 on oil prices. So, not great, seeing a little bit of a run on oil here. The oil price issue is something that does move your headline inflation figures substantially. That's not necessarily what the Federal Reserve is really focused on, but they will focus on both the core and the headline. So they're not going to ignore the headline. And so when we get these oil price moves, you get dissatisfaction not just with inflationary numbers from the Fed, but also from people. I mean, it was just, where was I? I was up in NorCal the other day. And sometimes when I go to airports, I get lucky. I get a free rental car. It's called a crew car. When those are available, we can grab that, and, you know, especially when we're only in an area for like 30 or 60 minutes. Well, the crew car had like 11 miles left on it. So I'm like, okay, I got to put fuel in it. Now, what was kind of cool was it took like 4 minutes to get fuel. And, I went from like 4 miles left in the tank to like 250. And I'm like, oops, I only put 7 gallons in it. It was crazy. I feel like I forgot how to fuel. But anyway, I'm like, oh, didn't mean to put that many in. But anyway, pay it forward is what I thought. So it was okay. The tank was almost full. But it was kind of remarkable just because it's been so long since I've actually filled up gas. And I'm looking down, I go, $6 a gallon. Gosh, California, you suck. Then I'm looking at oil prices and I'm like, well, they have been going up the last 5 months. And don't get me wrong, a lot of things I like about California, but all the extra gas taxes they use, oh, yikes. It's crazy. So Brent is your international blend. Remember that. So when you see or hear me talk about Brent, it's international. So that's at 88.57. And again, that's a 5-month high. And then if we look at WTI, that is going to be your US blend or the Western blend. That's sitting at about 84.89 right now. Also about a 5-month high. Yeah, yikes. Okay, so let's see, what else? Right, okay, yeah, you are now at the 10-year high of the day, 4.39. Notice we really got this resurgence of the 10-year simply from one data set, from a random ISM. Like, we didn't even do a video and like, watch this before tomorrow, the ISM is gonna rug pull you. We just weren't expecting that. I think that's where markets get spooked sometimes, is when we get data that's unexpected, right? I mean, it's sort of like PCE. Oh, we got a slightly better read on one of the numbers. Everybody's really excited. Market rallies. We shall see if that continues today. So within the next 17 minutes, those Tesla delivery numbers should be out. I'm sort of just refreshing the website, so I'll have it for us once it's up. I'm going to look at the rate cut monitor. So we're going to go yields and rates. And the reason I mentioned that is with the 10-year moving basically now at 4.4 on the 10-year. We probably are unpricing June even more than what we thought previously. So last week, we were sitting at somewhere around 70% likely that we were going to get a June cut. And I think y'all know I've been pretty consistent about this for probably the last 2 months now. I thought, you know what, we're probably not going to get a cut until about September. Has been my thought. Well, right now we're sitting at a 56.5%. Actually, I got to add 2.2 in there. So 58.7% chance of a June rate cut. So last night that did go below 50%. That is interesting. It's slightly above 50% again. Now we go to July and we're sitting at a 72.4% chance of a July rate cut. There we go. And then if we go all the way to December, we have, let's see, 475, 45, 3. So what are the odds of us getting 3 rate cuts? That would be, well, let's add these numbers together here. So 337 plus 17.6 plus 3.7 plus 0.1. 55.1% chance. That's very low. Of 3 cuts by December. So that's probably the lowest I've seen the 3-cut pricing so far. So all of that's deteriorated. That was over 70 to 80% as well. Okay. Now, something else that does occur this week is we are going to get the jobs report later this week. So we could throw in the catalyst for that. And I want to see what the estimate is right now for jobs. Jobs report comes Friday. Estimates are... Okie dokie. Let's see here. Oh, here we go. Okay. Jobs. Okay, change in non-farm payrolls is expected to be 208. 208K jobs expected. And looking for an unemployment rate of 3.8%. Unemployment expected versus the 3.9% prior. And then we're also expecting to get that wage gains number. The month-over-month wage gains number is expected to go to 0.3. So 0.3% wage gains expected. That's the month-over-month figure versus 0.1% last month. Okay. Got it. Okay. So that's a catalyst for Friday. And then, of course, we'll get Jolts. Jolts today, 7 a.m. PT. And we're looking for... It's now been revised to 8730. 8730K job openings expected. There we go. So I've got that all written out over at ehack.com. Okay. By the way, I wanted to... Let me see here. I'm going to run a quick little poll. Actually, do we want to do that? Nah. We'll come back to the poll just because we are getting close to data and I don't want to distract from it. So we'll stay tuned for that. Now, Rivian numbers due this morning as well. It looks like y'all are saying those are out. So let's see if that's true. Okay, Q1 delivered 13,588, and the estimate was actually only 11,893. So, let's write that down. So, Rivian beats on delivery numbers, Q1. The estimate, estimate was 11,893. Actual 13,588 delivered, and 13,980 produced versus 13,817 estimated production. Now I wonder how the stock's actually moving on that Rivian beat. Let's see. That's Tesla, but Tesla's stock price doesn't matter right now. It'll matter after the numbers. So that sets up your whole earnings period. Yeah, the stock didn't actually move. That's actually quite fascinating. You did not see a move here at all. Okay, Tesla China. Let's see here. Tesla China. I think we had... I want to see the March and Feb, or the Jan and Feb numbers for China again. Let's see here. Yeah, that'll take a sec. Okay, that's fine. Okay, so China. Ah, yeah, here we go. Okie dokie. So Tesla China, remember we added together the Jan-Feb numbers. And the Jan-Feb numbers were negative year over year. Yeah, here we go. We were down 19% in February year over year. And for January and February 2024, we were sitting at 100,246 versus the 140,453 for Jan-Feb of last year. Let's see here. However, Tesla March China, there's a note here about China deliveries being estimated for March a bit higher. Let me just put a little reminder of this here. Reminder on Tesla China numbers. There we go. Tesla, let's try March 2023 to compare deliveries. So, okay. Tesla China deliveries. I will get to the bottom of that. All right, fine. So, yeah, I just have there's just a note here. Preliminary data suggesting deliveries will be 89,000 units March in China. But I can't get a 2023 number. There we go. Hold on. Well, that's 5 hours ago. The PCA said Tuesday that Tesla delivered an estimated 89,000 vehicles in China in March, up from 60,000 in February. Okay, and so how does that compare? So that was a slight increase from the 88,800 in March of 2023. There it is. Okay. Okay. Well, fine then. Okay, what else? So, in other news, while we wait for good old Tesla, whenever those numbers come out, we are going to see what the suits are saying. Yeah, not a surprise they're talking about bonds. Positioning in U.S. Treasuries is becoming less long as the risk of persistently higher yields increases from a cyclically strong U.S. and global economy. Right. So there's regularly been the idea that, hey, you know, once the rate cut cycle starts, bonds will rally. And so you want to buy the dip on longer term bonds because then you can lock in these yields for potentially 10, 20 years, which is true. I mean, think about it. If you're retired and, you know, you've got a bundle of cash and you're like, what should I do with this? I mean, you could buy a 20 or 30-year bond and you could lock in some of these wildly high rates for quite a while. The question is, you know, will those actually be wildly high, or are we just back to sort of normal, right? So that's hard to know. If you look at sort of just a historical average of rates and you accept the 70s and 80s as part of that, you can say, oh yeah, 5%, that's historically normal. Why do I need a 30-year bond? Well, mostly because I guess when there's a recession, we're probably going back to zero. But anyway, 30-year, you could lock in for 4.5%. 4.5% on a 30-year. So for 30 years, you could get your biannual distributions, passive income, doing nothing. It's crazy. So I think that's kind of cool. Okay, so let's see here. How's BT Sizzles doing? Yeah, still failing. Still failing at that support level. Not great. You've got the Qs down about 80 bips, rotating down lower right now. Donald Trump's SPAC was down 21% of doozles yesterday. Yikes. You've got very, very little green today. I mean, I've got 7 stocks that are green today. Well, 2 of those are the VIX. Volatility spiking. So you've got almost nothing that's green. You got ConocoPhillips, Spirit Aerosystems, Gold, and Devon Energy, Alcoa, Steel. You know, that's it. Very little on the green side today. Instead, Petco's getting absolutely reamed. Petco's down 8.7% on the day yesterday, followed by another 9% in pre-market. Hut 8 down about 2% yesterday, down 8.78 in the morning here. You've got MicroStrategy down 4% yesterday and 8% today. Robin the Hood down 3.5 yesterday, down 5 in pre-market now. Coinbase Sizzles down 4.7 from 4.9 yesterday. Sunrun's down, Affirm's down, all of these down like 3% plus. Astera Labs, once again, after its IPO, it's just bled out, it's down. Palantir down again, down in the $22 range now. It's really sort of given up that 25. Reddit's burning. Yeah, I do think Apple's down as well. Enphase down 2%. Nvidia's down 1.6% back at the 888. That's a lucky number, I think. Is it the Chinese culture that likes the 8s? I think it is. You get sometimes you get Chinese listings. You go to like a Chinatown, you look at Chinese real estate for sale. Well, I guess it's technically American real estate, but in like a Chinatown. And they'll list it like, oh yeah, this is 988,888. It's kind of interesting. It's sort of like imagine if you just everybody sort of, yeah, no, that wouldn't work. I was gonna say, like, if every sort of race had a different number, but yeah, I realized everybody would try to fight for 69. That'd be problematic. Anyway, so okay, yeah, still sitting at about 4.395-ish, so rounding up to about 4.4 there on the 10. I want to see how the 2-year's doing today, because it's also going to tell us a little bit about inversion. Yeah, see, the 2-year's flat. And the 2-year was basically flat yesterday as well. So, not great, because that's considered a bear steepener. 2-year essentially flat second day in a row. Ooh, 5-year break even. Yeah, that's a good question. I can pull that really quick. So let me grab the 210 yield curve inversion. So if I grab the inversion, yeah, we're negative 33.7. So we're becoming less inverted, but that's, you know, this is considered a bear steepener. And this is what we saw in somewhat in July, August, and September of last year, where the market had a little bit of a correction for 3 months. So I'm gonna write that down. Bear steepener is what we saw in July of last year. Yeah, that's when we had the yield curve move up, but the 10-year didn't really come down that much in terms of the yield curve inversion. So in July last year, which started the 3-month sell-off. Yeah. Oh, great. All right. Come on, Tesla. Where are your freaking numbers? All right. Whatever. Should be out, I mean, within the next 2 minutes here, but I don't know. I mean, I guess it could come out later. So, yeah, okay, 5-year break even. Somebody wanted to know. 5-year break even. Let's see what we got. Okay, let's see. Wow. Did you already know? So it's matched for highs within the last year, and that match of last high was actually just March 21st, so about 10 days ago. And you're sitting at 2.483. So I'm going to write that down. That's 2.483% on 5-year break even. Highest in 1 year. Actually, let me go back a little more because I kind of want to see what that really is the highest in. It's the highest since, since about March of 2023 banking crisis. Highest is since March 2023 banking crisis. And you can kind of understand why. Because during the banking crisis, the thesis was people thought the Fed would cut and stoke inflation, right? So we're at the highest level now as where we were in the banking crisis when everybody was sort of freaking out that the Fed was about to cut in an emergency basis or on an emergency basis way too soon. Okay, here are the Qs. Yeah, still rotating down. You get some sell pressure going into the day here. One thing that was interesting is yesterday on Tesla, you might notice this run into the close right here. See all this buying, that fund buying right there? I think that's quite a bit. I mean, you had like a volume spike there of like 7.8 million at the close. You do usually get a volume spike, but see here you didn't get much activity and you were at 4.6. So 4.6 million shares. Here you had 7.8 million shares. So you definitely had some buying going into these Tesla delivery numbers yesterday. So, you know, who knows? Maybe that somewhat suggests they'll be better. I see Tesla just dropped another %, but I don't have the numbers out yet. So, dude, somebody's got insider frickin' information or something. Yeah, it's not on the website. Reuters doesn't have it. Doomberg doesn't have it. Oh, I don't know which way that's trying to go. It got very volatile there all of a sudden. I don't know. It's just like 6 o'clock volatility. It's just like you're just gonna wake up and get 6 o'clock volatility. Is that it? Who got leaked the numbers? Oh, somebody wrote here 433,371. Where? All right. Well, y'all beat me to it. I wonder if it's like a business wire, and that's why the numbers are coming out. I don't know where the hell you got it, and I'm a little pissed. Dude, I pay like $1,600 a month for that. I pay like $3,000 a month for that. And I got and we got free Twitter. Dude, nobody has this anywhere. Like the Tesla press release on their website isn't even out yet. Go to press. I'm literally on the press release's website. ir.tesla.com/press. Now it refreshed. I must have been cached. Okay, I must have been cached. Production 433, deliveries 386? No. In the first quarter, we produced 433,000 vehicles and delivered 386.8. Holy crap, dude. That's a very bad. That is the worst number. Oh, man. Tesla Q1 results. Holy smokes. Dude, everybody got that wrong. Everybody. That's very, very low. 386.8 for Tesla deliveries. The estimate, the Wall Street estimate was 449. That's very bad. Okay, that makes sense why it's falling like this. So Troy was 409, was where Troy was. I have this up on ehack.com now, so if you want to take a look, I want you to see this, okay, because this is a big deal. So the consensus estimate from investor relations was 443, and that was the average. The median estimate was 431, and the Wall Street estimate was 449,080 was the Wall Street, I'm going to write that down, estimate. And so 369, that's very, very low. And then I want to just break down some of the numbers here. So this is the number here. Produced over 433,000 vehicles and delivered approximately 387,000. Decline in volume was partially due to the early phase of production ramp of updating the Model 3 at our Fremont factory and factory shutdowns resulting from shipping diversions caused by the Red Sea conflict and arson attack at Giga Berlin. See, but wait a minute, dude. That, like, the Red Sea conflict supposedly was to affect parts, and y'all still produced 433. Now, I guess maybe if you're shipping from China vehicles, completed vehicles, maybe, that is interesting. But yeah, this is an ouchie wouchies. So if we now, I want to also compare. Let's see here. I'll put a little note there. Okay, so this, trying to understand a little bit more as a percentage, how much of a miss this is. 386,810 divided by 449 on the Wall Street estimate. That's about a 13.9% miss. About a 13.9% miss on Wall Street's expectation. That is from Troy. Troy missed by, wow, Troy missed by 5.4%. He's usually within 3%. So, and missed to the downside on that one. Wow, that's crazy. And then you have the both median and average surveyed deliveries missed as well. Fun note, the new CFO dumped some shares right before, after his option exercise. I'm sure that wasn't pre-planned. I'm just being jaded. Okay. All right. So, okay, April 23rd is when we're going to have earnings. So that's confirmed now. Earnings April 23. And I don't know if you can really, like, Red Sea, like, the Giga Berlin shutdown. Giga Berlin shutdown more likely affected production rather than deliveries, IMO. And then Red Sea could make sense, but they've never mentioned that before. Red Sea previously was only mentioned as affecting parts supply. Now they are blaming deliveries on the Red Sea as well. And then, of course, the refresh, that makes sense, the Fremont shutdown. But again, the Highland refresh would also affect production, not deliveries. And that gap between production and deliveries is not great. You're at 386, 810 divided by 433, 371. Yeah, you only delivered 89% of the cars you made, right? Only delivered 89% of the cars you produced. You know, it used to be that we would deliver substantially more than were produced. So this full summary so far is written out over at ehack.com, and I kind of keep adding to it here. Let's see here. Blah, 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 blah. Okay, that's all boring. Let's see if they're saying anything here. Are they talking Tesla? Yeah, they are.
Reports come out of China, and that clearly has an impact here. That's why the stock is under the pressure that you're seeing right now. Again, 387,000 vehicles delivered in the first quarter. The street was expecting 457. Even some of the bearish analysts were expecting, what, 410, 415, not 387. Guys, I'll send it back to you.
Quick.
Sorry.
I was going to say, Phil, full year estimates, I guess we can say goodbye.
Right. Explain it to me like I'm 5. How can you deliver more than you produce? Right. So, the way that used to work is it wasn't that they delivered more than they produce all the time, but the way it used to work is you had such a backlog of cars that consistently you had and you had such a logistical problem getting the cars out that once you started ramping manufacturing, you kind of had slightly more production than you had deliveries. And that took like 2 years to kind of feather out. So you would consistently beat production with deliveries by about 1 to 2,000 almost every quarter. You were consistently kind of delivering more than you were producing. And that's just because at the early point you kind of produced, and then all of a sudden people went crazy for the cars during the pandemic. So, yeah, that's, I hope that makes sense. That certainly wasn't like a 5. I'm not really good at explaining things like 5. I need a 5-year-old here, and then I feel like I could do it better. But anyway, so Steve just spawned in out of nowhere and is pitching gold, silver, and copper. I think that's because somebody in the chat is talking about lithium prices. So lithium prices have kind of collapsed. You know, if you go on sort of a... I mean, here, I'll just show it to you. These are lithium prices over time. You could see during COVID, lithium prices exploded. But you've got this rotation down in lithium prices to really 2018 levels. So you've really settled down. Whereas, you know, you look at gold, for example, year to date, you're up 13% on gold. Silver's up 6.5% year to date. You know, cocoa is up more than copper. Cocoa for chocolate. Cocoa for Cocoa Puffs. Those are going to be expensive now. Anyway, let's see what they're saying here.
At that level.
No, but that's not how consumers think, Jim.
No, they're
I think
not.
there's very few people in this world who sit there and think, well, ultimately, is the fuel source for this a coal-burning power plant? Is it nuclear? Is it hydropower? That's not how consumers think. You know that. The
No,
way
I
a
know, I'm
consumer
just-
thinks is, you know, what's the best option for me price-wise? And then
Right.
also, you know, am I comfortable making this transition? And there is no doubt that the recharging issues in this country are a huge issue.
Well, I think it's... I personally don't think the recharging issues are a huge issue. I think the perception is that they're a lot worse than they are. But let's be real. We talked about this yesterday. You know, my father-in-law is like, I got the RAV4 because if I want to go to San Francisco, I don't have to spend an extra 40 minutes charging. He's not wrong. Like, yeah, you do need an extra 40 minutes probably. So hopefully that gets better in time. Yeah, that perception gets sort of amplified over time. But anyway... yeah, this is an unfortunate day for Tesla. Wow. Okay, we're gonna look at the stock chart in just a moment, but few housekeeping things I just want to pitch really quickly. So, Easter is a really bad day for having a coupon expiration because people are off. Like, I have religious people in the office and people aren't able to respond to all your emails. So in email, we've been extending the coupon code expiration for the stock buy-sell alerts, the trade alerts, the lifetime access to the course member live streams and whatever. So we're going to move it to Friday. That's my fault. I shouldn't have picked Easter. That's really dumb. So I apologize for that. That's my fault. If you need a bundle, email us at staff@meetkevin.com. But anyway, we got until Friday. Okay, so with that said, the House Hack warrants do expire in 6 days. So just fair heads up that if you have warrants from the accredited round in September to March of 2023, so September 22 to March, those expire in 6 days. Okay, let's now look at Tesla here. You're sitting at a 7.2% down. That's pretty wild. So you are now, let's see here. Let's see. No, stop it, Siri. There we go. Okay. So you're now down 727. You're down at 162. I want to see where this next stop is for Tesla. It should be in the 150 range. I actually don't have it marked. That's not great. So if I go out on the week chart, well, okay, yeah, I do have a trend here. I'm sitting at about the 140s for the channel. So for this widening trend channel here, I'm sitting about the 140s. And otherwise, I mean, you could try to make an argument that 152 is a stop. That seems to be a light bounce here. So, you know, if you're trading, I'm just going to throw in a little purple. We're going to put that right about here, 152.16-ish. Okay, if my computer will correspond, it doesn't. Something's wrong with my computer. Stop it. Sometimes my trackpad does that because I have it on this with this Roland HDMI and it starts doing funny things. There we go. I'd like that to be at about 152.16. I preferred that. But let me actually, I'll just zoom in on it. What do we have here? 152.37. There we go. 152.37. And when they're not fibbies, and they don't have a lot of data, I prefer to use yellow. It does get a little too liney, but that's why, like, I like using the yellows because I could just go in here and I can kind of just delete the yellows as I don't need them again. But so far, that 170 has actually been pretty functional. So we'll see. I don't know that you're necessarily going to go down all the way there. I mean, as you can see in pre-market, you're already trying to get some of the buy the dip at about the 162 level. Notice, though, what's also happening after those Tesla deliveries. It seems to be having a broadening effect on the market. You've got a 2% decline on ARM. You've got Disney's down about 1 5. The Qs are falling into the open here. Matterport's down another 275. MicroStrategy's down 827. You've got Bitcoin down at 65.4. Palantir down 3% in the pre-market. Good Lord. Enphase down 277. I think everything's red at the moment. Now, usually we don't sustain this much red. Look at that, Embraer, green again. How is that all of a sudden being like one of the best plays this year? Outside of AI, you know, it's crazy. But anyway, Petco down 8%. Yeah, Tesla's now up there at the top of the list, sitting right around 7%. Although just about 6.9 now. Whew, boy. So Tesla, yeah, okay, Q1 earnings call, 4:30 Central on April 23rd. That's fine. So Rivian beat on deliveries. I do want to see how's Rivian stock moving. So Rivian's down 3.5% despite the beat on their figures. But I have to say, that was like, nobody got that right on like those Tesla estimates. That's crazy. That was such a wild move there. Anyway, we are going to get the Jolts data. That will come out in about 43 minutes. And then I wanted to run a very quick survey, and then we're going to get into some more data and some commentary here from the suits and otherwise. So, quick little survey that I wanted to make. It's basically, would it be worth having a summarized, say, 8 to 10 minute video every sort of morning news and every evening for evening news at the same time? Generic kind of titling, right? So it's basically just like an 8 to 10 minute roundup. Like, would you watch that, right? So, would you watch it? Yes, no. So I don't know, or just, let's see. Would you watch a morning and evening news summary, 8 to 10 min, no BS or bias? Just post normal videos, posts, there we go. Okay, so I put a third option in there, which is just post normal videos. Personally, I just want to give you my thesis quickly. I see a lot of people on YouTube, they post a lot of videos on these individual topics. Like, I'll just give an example, like Ben Shapiro yesterday. He had this video, and it was like this whole thing about how, what was it? It was the press secretary, or who was it? But basically how, like, one person's embarrassed or whatever. I'm going to go look at what it was really quickly. It was this whole video. It was like a 9-minute video on one thing. Oh, that one. Yeah. Okay, I saw the press secretary one too. It was the Easter service interrupted by protesters. And it's a 9-minute video on, look at these people. They're interrupting Easter. They're holding up a banner. And I'm like, I don't have time for that. I can't spend 9 minutes. Okay, like, show me a picture of it or like a 5-second clip, but I don't have 9 minutes for one fracking thing like that. So, I'm not trying to criticize, any one side or whatever. The people on the left do that as well. People on the right do that. I just kind of think, is there a way we could just, like, summarize all this damn crap? Like 8 to 10 minutes, morning, evening, and just give me the scoop. It's been a personal frustration. So I don't know if other people feel that way. But I do. So, anyway, otherwise you just sit there for like 3 hours reading the news. It's like, oh my gosh. Now I don't mind doing that. I do that anyway. That's pretty much my job. But that doesn't need to be your job. If I'm a plumber or electrician, I don't got more than like 20 minutes a day for the news. But you kind of want to know what's going on too. You want to be informed. Anyway, okay. Shout out to the neighbors yesterday who played football with us. That was fun, the kids. It's really cool having kids too. You can kind of go outside and play with people. It's like not awkward to play with people when you're an adult. Otherwise, it's like, hey, you want to play? You just get punched in the face. When I was a kid, we always used to call each other, pick up the landline. Hey, you want to play? That's so creepy in hindsight. Anyway, all right, let's see what they're saying over here at the C and Sizzles.
Final split. One more look here at the pre-market. We're stalking the street in a moment.
Yeah. Of course, they're transitioning. All right, whatever. So, okay, so what do we have? Let me see what the bond deals are doing. We are getting some slippage here on not just Tesla, but also the Qs. You can see the Qs are trending right down. This is somewhat bearish here. Somebody was saying, hey, this line isn't horizontal. That's true. That's because it's a trend line. You can see this trend line's been going for a while, and we just broke that trend. So that's not fantastic. And the fact that we dropped right to that line indicates to me that that number is saying something. Yeah. Yeah, I agree, Paul. Like, generally, that's all I really want to focus on, too, is stocks of the economy. I personally, I didn't mean to use that protester example as a way of saying that's what I want to cover. It's just a way of saying, like, if I'm going to care about that, I'm only going to care for, like, 5 seconds in terms of, like, the time I want to dedicate to it, not 9 minutes. But I also generally don't care about a lot of the drama that goes on, like, celebrity drama. Slay me, and some of the other political stuff. It just kills me. I can't handle it. Like, I look at it, I'm like, I know I should be covering this. Like the Amber Heard trial, you know, poor McKay. This guy, he spent like, I don't know, 30 hours going through everything in that Amber Heard trial. I'm like, I can't cover it, man. I can't do it. I'm gonna go to sleep. Like I don't know. That's just me. Okay, let's focus now on the market news. I'm getting too distracted with the chatty chat here, but I appreciate y'all. Okay, so bond longs throw in the towel. That's a headline from the suits right now. This is a way of saying that some people who are long bonds are basically just moving to money markets, and they're taking the L on maybe some of the long bond positions they have. At 4.4% on the 10-year. Kind of makes sense. You may as well just be in the money markets. You're probably even going to make more money in them. And again, you are getting a bear steepener right now, which is what we did see in July. And that started our risk-off sell-off. And unfortunately, now we're getting a trend break on Bitcoin before the halving, which is a big deal. Obviously, we just got horrible numbers out from Tesla. I'm actually really disappointed in that. I don't know what to be more disappointed in. More disappointed in that the numbers were that far off of the estimates, which we knew they were going to come in low, but that low is crazy. I mean, we never ran the year-over-year number on that. So the year-over-year number was 422,875. So if I divide by 433,371, we are divided by, sorry, that's the production number, my bad, 386,810. Wow, 8.5% decline year over year. Holy smokes. Is an 8.5% year over year decline in Q1. Oh, the problem, and it's not just what that's going to mean for earnings in Q1. It's also going to mean, what does that mean for Q2 projections? How are you going to beat Q2 deliveries now with how rough that came in? So that's not great. Not great. I'm curious how the market's going to react, though, when the market opens. So in about 5 minutes, the market will open, and we're going to see either whether Tesla is going to basically have its dip be bought or not, right? So, Kevin the Tesla bear. See, I don't like to think that I'm a bear. I am short-term bearish. That is true, but I don't think I'm a Tesla bear. Repo Man coming for Jet. That'd only be possible if I was still in Tesla stock. Does Tesla still own Bitcoin? My understanding is they do. Yeah. News hack, exactly. Never mind 9 minutes back about you running for mayor in San Francisco. Okay, but let me ask you, were the ideas good? Like in that, in the San Francisco mayor video? Like I was actually inspired to make that video because I was in San Francisco. And I'm like, this is actually really what San Francisco needs. Like I actually really thought like that's the platform to run on if you want to change San Francisco. Also get a real chainsaw. It was a real chainsaw. Chainsaw was a little much. Come on, man. You gotta invoke the Javier Milei. I actually mentioned Javier Milei in the video. Yeah, I did. Yeah, the chainsaw. The problem was I asked the guys to get a garbage bag because I have used power tools many times, gas powered, everything, and they leak even though they're brand new. Like it's going to leak. So I'm like, guys, get a garbage bag. Anyway, I get to the plane after going to the bathroom, and it's just on the carpet. I'm like, no! So I ended up putting a bunch of newspaper down for it. And sure enough, by the time we landed, there was oil all over the newspaper. I'm like, this is why you don't put gas-powered tools on carpet. Yikes. Yeah, no, I agree with you with the quality content, less is more. No, I agree with that. Will you clean the poop off the street? That's what we talked about in the video. Kevin broke the law using gas-powered pools. I called the chains. I called various different local power tool stores, and I'm like, I need a manly chainsaw. And they're like, well, we got this battery I said manly, and they're like, okay, you need gas. Got it. Yeah, no, we don't sell those. Call such and such. It was like Bliss Power Tools in Sacramento. And I called Bliss Power Tools. I need a chainsaw. What do you got? And he's like, oh, we got the MS-217. And I'm like, can you get me out of the door for under $250, fueled up, lubricated, and ready to go? Because you got to, like, mix the stuff. And he's like, I got you, man. We'll be there in 10 minutes. It was great. Anyway. Lauren really enjoyed it. So it was a win. Okay. Ross Gerber just tweeted, 386K is a crappy number. Tesla needs a new sales strategy. Unfortunately, Tesla shareholders are paying the price for the reality Elon has created. Ouch. Well, people are buying the dip. All right, 2 minutes to go before the bell. It's a German chainsaw, too. German chainsaw made in China. But that is true. Yes. It was a Stihl. Yeah, those are really good chainsaws. My dad came by, he's like a Festool kind of guy. His entire workshop is Festool, all the German power tools. And he's like, Deutsch, sehr gut, mein Junge. German culture is hilarious. I think every culture is like that, though, It's like,
Which will trade here at the big board under ticker GEV. GE Aerospace will retain the traditional GE ticker. That company's chairman and CEO, Larry Culp, and GE Vernova chief Scott Strazik will join us here at Post 9 shortly after ringing the opening bell. Great look in the journal today.
All right, they're actually being pretty boring right now. We got about a minute to go for the bell. I do want to note that it looks like we're getting a little bit of a recovery. Everything's still pretty much red, and the volatility index is basically the only green. And we're down about 1.1 on the Qs. Bitcoin is still falling. Still falling on Bitcoin. Could be a trade going into BTC there. Tesla is recovering. So let's see what happens at the opening. That'll be the real tell, is what happens when the suits start moving in on buying the dipples.
Remember, they announced this plan to split up in November of 2021. Right. And here we are.
When this division was the weakling, and Larry Culp promised investment grade, they got it. This is a very big deal. Very important.
Look forward to that. Let's get this opening bell and the CNBC real-time exchange with the big board. GE Aerospace and GE Vernova celebrating their listings. As we said, we'll talk to Culp and Strazik in just a few moments. Over at the NASDAQ, it's trade.
Yeah, people love the DeWalt batteries. That is true. Those are great. Okay, so we've got the market open. It does look like you're getting a little bit of Buy the dip. I'm not sure how robust that's going to be. You're at about negative 6%. Matterport drops 4% here. Bitcoin's dropping. It's now under 65, sitting about 64.8. Tesla's really bobbing around this 6% level. It's really trying to go green here. It really is. Disney's only down about 0.5%. You got now about a 5.5 on Tesla. Oh, here we go. It's recovering. So Tesla does look like it's getting a dip out of here, but so does the broader market. ARM is moving up again. You've got the Qs pretty stable right now, actually. Tesla's almost in the 4% down range. It's a little hard to tell which direction it's going to go. Let's look at Hut 8 down almost 10%. MicroStrategy almost down 10%. Robin the Hood's down about 6%. Coinbase down about 6%. Sunrun down 5%. Super Microcomputer 349. Enphase 3%. Nvidia is down about 2%. Tesla now down 6% again. It couldn't hold it up. It was trying to go green there. There was definitely a buy the dip movement. We saw that there. We almost went into the 4% level. And it looks like we are now potentially worsening again. We're getting a green candle, a red candle now on the Qs. And, buy the dip's coming back on Tesla. Okay. It's getting into 4. There it is. Negative 4.9%. Nice fat candlestick there. Same thing on the Qs. So there is a buy the dip mentality right now on Wall Street. That's good. Yep. Look at that. Nvidia's getting its dip bought, sitting about that 888 level, getting a dip bought. You're not getting so much love over at BTC right now. 64.7 continues to slip. You got Restoration Hardware down 4% in the open here. MicroStrategy down 10.2. Enphase down 2.2. Open Door is down 5.8. Affirm. Those consumer stocks just bleeding out on Affirm. Look at that day chart on Affirm. It's basically been straight down over time, though. Tesla goes back to about negative 5.75. It is. It's starting to trade a little sideways at about that negative 6%. Disney going positive. Disney's trying to gain the lead right now. Back to negative 0.1. See what happens. It does look like the Qs are sticking at that 440. I want to see, are we topping out on the Qs, or what are we doing pattern-wise? Yeah, we kind of are. Look at this. You're getting a lot of, are we on the average here? Yeah, we are. These are the average candlesticks. My goodness. I mean, I guess I could have known. The nominal candles look, wait, hold on. Yeah, there we go. There we go. Here are nominal candlesticks. But we look at the average ones. They feel so like give or take, right? It's green, it's red, it's green, it's red, it's green, it's red. And this is a market that's trying to like rev up and trying to push through those all-time highs, but we're having trouble. So we're getting stuck by that 440 level, which I think we've got a yellow. We've got a yellow here at 438.9. That's sort of more of a not as strong support or resistance line. The yellows. Again, BTC is continuing its drop, and Trump stock actually having a little bit of a flippy-floppy here. Looks like we're trying to get up to about that $51 level. The buy the dip did not work on Nvidia or Tesla. Both buy the dips right now, back to the beginning of the day. So far, Tesla sitting negative 6%, Nvidia dropping again, now down 2.3%. You did get a buy the dip movement on these. It doesn't look like it was working. Same thing with ARM. S&P 500 pullbacks are among the smallest in history right now. The U.S. stock market usually goes up and down, except in 2024 when the S&P 500 has avoided any major pullback so far this year. We've seen a 10% rally and only mild declines thanks to growing corporate profits. Tesla, now the headlines are coming out on Tesla. Tesla sales fall way short of estimates and first drop since 2020. Keep in mind that 2020 decline was COVID. Apple investors seek sign that the worst is over in quarterly slump. Well, let's see if that ends up being true and how the stock market is moving here. Down about, you're dropping below 169 right now on Apple. Jump in oil prices being factored into the market as we speak, says Farmer Brett. Farmer Brett, can I sell you a John Deere tractor? Like, I want to be like the sales guy who comes to the your farm. Dude, Reuters is put a red banner for Ross Gerber. Ross Gerber says Tesla board of directors should be replaced immediately with independent board of directors as required by law. Oh no. Robinhood falls 5.9%. Ross is going off. Basically, Tesla can't sell its cars due to Elon's behavior. Let's stop blaming the Houthi rebels or the German environmental terrorists or a recession that never came or interest rates. Only one person is responsible for this. Damn! Tell us how you really feel, Ross. Oh! Ross is bringing the fire right now. For over a year, I've been warning about this potential reality. Now it's here. It's time for shareholders to assess the blame where due. The Tesla BOD should be replaced immediately with independent directors as required by law. Let's see here. Let's see here. Yeah, so yeah, there it is. Okay. The Tesla board of directors should be replaced immediately. That's interesting. Yeah, that came across as a sort of a red alert on the news banners. That's interesting. Anyway, you are still trying to get a little bit of a green push here. Let's see. Okay, yeah, trying to get a little bit of a recovery here, getting those green candles on. So let's see. Okay. It's tough though. See, you're right back to 6%. Every time I get an average green candlestick, I get a red. Okay. All right. Nvidia, yeah, Nvidia's trying to push for a recovery here, but the Qs aren't. As you can see, the Qs are getting pretty stuck here at about that negative about 1.15 level. Though it does look like they're trying to push for a little green right now. So we'll watch this here. And whew, oh, it's just dirty today. Okay, so what else here? Okay, Canada shows the world how to make immigration work. Ooh, does it? The Fed has never cut with an economy like this. Oh, that's an interesting line. Not that I want to be bearish. I'm just curious what their argument is here. So the Fed has never cut with an economy like this. It looks like the spidey senses were right to tingle, but perhaps they were pointed in the wrong direction. The big story thus far in the new quarter has been the spike in market interest rates and fixed income, reassessing the monetary policy prognosis. Good Lord. What is speaking at this like college level? They're basically like, yo, man, the bond investors like, damn, maybe J Powell ain't gonna cut as much as we thought. Okay, I'll translate that to English. Okay. Let's see. At the time of this writing, S&P futures are now 1% lower. That's fine. Okay. At the heart of everything is the increasing public and relevant debate about how restrictive policy is. Much of the hand-wringing following the dovish Federal Reserve policy announcement last month focused on signaling from financial conditions. That's a legitimate area of concern. For traders, the normal rules of engagement do not apply when you're in a bubble. The same is arguably true for monetary policy. Okay, in English, y'all listen up, man. Things are getting a little bubbly around here, and maybe we're just not gonna contribute to the bubble by lowering rates, right? Monday's ISM was another mote in the eye. I've never heard of that in my life. M-O-T-E, mote in the eye of those things arguing that policy is restricting output. Oh, okay, so like a slap, like a, okay, all right, I get it. Nothing special in absolute terms. The fact that it bounced back into expansion for the first time in 18 months actually suggests that the impact of high interest rates are waning, not strengthening. Oh, that's actually a big line. I'm going to write that one down really quick. That's a big line. ISM data. So this person, I think he's brilliant, by the way. This is Cameron Cruz. Chatted with him before. Well, it's not Cruz. It's like Christ or something like that. But anyway, I don't know why in my head I always say Cruz, but I know that's not it. But anyway, so the you know, 50.3, his argument on ISM is nothing special, but the fact that it bounced back into expansion for the first time in 18 months actually suggests that the impact of high interest rates is waning, not strengthening. Oopsies. Save that. That's a banger line right there. And that's a really good point. I actually didn't think of that. This is one of the reasons I like reading as much as I do, because I mean, I saw the number came in hot, but that's a good point. It's like, why are we going into expansion when interest rates are supposedly so frickin' restrictive right now? You don't need to focus on inflation or even financial conditions to be skeptical of the notion of imminent rate cuts. While manufacturing may be a relatively small portion of the economy, it punches above its weight in terms of volatility and contributions to GDP. Basically, y'all, if the economy is pushing manufacturing up and not down, it means things are Gucci, and you can keep rates as high as you want. The economy continues to boom. That's the level, like, I feel like sometimes I'm reading like Aristotle or like some of this like old Greek crap where you have to read a paragraph like 4 times to understand what they're saying. Like, whoa, that's a doozy. All right, let's see here. Monday's ISM. Okay, we talked about that. ISM was slightly above 50, but even if we remove the criterion, the FOMC has never cut with the ISM at a 1-year peak and the unemployment rate below 5%. Ooh, that's an interesting line as well. Fed has never cut with ISM above 50. Oh, sorry, at its 1-year peak. ISM at 1-year peak and unemployment below 5%. That raises the question of what will make it do so now. It's also worth noting that inflation base effects... By the way, stay tuned for Jolts numbers, right? The Jolts numbers are coming out shortly. Jolts release at 7 a.m. So let me just put a little banner up so everybody knows. Okay. Going back to the inception of the Fed, I filtered always blah, blah, blah. Okay. ISM's only slightly above 50 now. That's fine. Filter for above 1-year high above 50. 1-year peak above 50 and unemployment below 5%. Never happened. Cynics may point to politics, but if you just decompose the change in yields across the curve so far, inflation break-evens have represented a much bigger share of the rise at the front end. Blah, blah, blah. Equities have so far shrugged it off. Another example of how the event horizon of an investment bubble distorts the normal function of not only trading. Oh, he's calling a bubble. Wait, I have to translate that. The event horizon. What? I feel like that's I remember that. What does that mean? That's like a science phrase, isn't it? It's a movie. Oh, event horizon is a boundary beyond which events cannot affect an observer. Where am I right now? Why do you write like this? Okay. What? So I think he's basically saying the stock market is an example of how the event horizon of an investment bubble distorts the normal function of trading, but also transmission of monetary policy. Okay, he's basically saying, yo, in English, translated by Kevin, okay, in English, okay, yo, this market be YOLO, FOMO, bubble mode, while yields be skyrocketing and data say no cut, dog. That's that stupid. There. That is much better, okay? So which one do you like better? Yo, this market be YOLO, FOMO, bubble mode, while yields be skyrocketing and data say no cut, dog. That's stupid, okay? That's my version. And then you have this version. That equities have shrugged off rising long-dated real yields by increasing PE multiples is another example of how the event horizon of an investment bubble distorts the normal functioning of not only trading, but the transmission of monetary policy. That is an important break in the usual chain of how real interest rates translate into policy restriction. Bro. My lord. Jeez. Whew. That sounds smarter than GPT. I don't think he used GPT on that. That's like beyond GPT. Put no cap at the end. Okay. No cap. Oh my gosh. This is comedy. Okay, all right. So how are things moving here? Rivian at negative 6.2% here. Tesla's trying to recover again. It's done this a few times now. It's really trying to push this 5% level right here. It's trying to push what looks like about 166.6 or so. ARM's down 4% right now. Whoa. How does it fall that quickly? Let's see here. So yeah, ARM's down 4%. And take a look at this. Oh, wow. Apple, okay, Apple's just started recovering. Nvidia's down 2.5. Okay, there you go. Tesla's getting dip bought. Down about 4.9. Bitcoin 65.1. You've got Restoration Hardware 5% on RH. My lord. Oh, volatile little puppy right there. Enphase 3%. Again, Affirm 471. Where are the big movers today? Hut 8 Mining 11.6. MicroStrategy 9. Lucid goes down 6%. Rivian down 6%. Tesla's still sitting at that 5% down level. Open Door Tech down 5.3. Volatility's really up today. 9% on volatility. John Deere's up. Embraer's up. That's it. John Deere and Embraer today. Wow. 13 minutes until we get to Jolts data, by the way. That was a crazy little line there. I'm gonna paste the Cameron version because I think it's a funny comparison. And then you know what we ought to do? We should do like a bottom line version of that Cameron Cruz piece. Bottom line, bad. Just one word. Actual text. I'm gonna put that in really quickly. There we go. Okay, cool. All right, so just sort of updating eHack as we go here. Again, we've got 11 minutes to go until we get Jolts.
But I think they're on that path, and where we can help today, where we can help as we think about future platforms, right? We're investing today, David, on the technologies that will not come to market until 2035, 2040. So
okay, that right there is actually a good line. I understand this is GE, and they're more of a, manufacturing kind of company. But I think that's true of a lot of things. Robots, AI, like a lot of these things are going to take way longer than we expect and that we're pricing in. We tend to price in a lot of enthusiasm. Get a headline. Jeff Bezos just paid $90 million for a third mansion on South Florida's Indian Creek Island. He's going to buy the whole island, isn't he? Can you imagine having that much money? Like, oh yeah, 90 mil on another island. Like, damn. One day, maybe we can get a bigger house. We have 7 children in 2,200 square feet and no driveway. I hate moving so much, and I've got such a nice little studio here. I can't do it. I can't move. Everyone else must suffer. All right. So, oh no, don't say Epstein 2.0. Oh, All right, how's thanks, Steve. I agree. House Hack Island. Stop. Hack Island. It'll just be Hack Island. HI. Forget AI. We got HI. Yeah. And then when you add in the nannies, you kind of can't go anywhere without bumping into someone. Imagine when these 5 children are all walking around in diapers. We're going to have to do like a daily vlog. Anyway, all right, so 2.3 on BTC, 2.3% down. We were down as much as 3% there, so we've recovered a bit on BTC. We did hit a low of 64.5. We are breaking below that channel, which isn't great, and we are hitting lower lows still and lower highs, so not fantastic. Apple's, trying to recover. So is Nvidia, but every time they try to recover, they fall back down. The one that is slowly trending up, I will say, is Tesla. So you are getting a nice uptrend here. It is somewhat suggesting that this dipply doodlah is being bought up by markets, whether that's retail or it's institutional or what. That's that seems to be the trend for today. We'll see what direction this goes. The next natural stopping point would be about 170 on the upside. Do keep in mind that one of the things that I always say this about Tesla is, earnings or like the delivery numbers are usually the good day, like that's the good part. The earnings numbers are usually the bad news, right? Usually. So, like earnings historically for Tesla have dropped the sucker another like 7%. And that's just been like the last year or so, right? We do have nannies, yes. Oops, I got rid of the Jolts thing. Jolts at 7 a.m. Wanted to leave that up there. So there we go. Tesla, Kevin is a bear from head to down. No, I don't think so. I think the volatile Nike swoosh will continue, but I do think we're in for the volatile portion. I do think in the short term, there are reasons to be bearish because the market has gotten ahead of itself. But yeah, I'm a long-term bull. Kevin, you will be like a bus driver and have to take roll call in your van. Roll call. Jack, here. Max, here. I hate hearing your stupid laugh. I love you too. How are we going to choose which live stream to watch when they are all streaming? I'll just watch Summer's live stream. I feel so bad for her. She's three surgeries down. She's got a little infection right now on her slice, but that seems to be recovering. Poor girl. She's getting better though. I keep her little picture right here. I don't know if that'll ever focus. It usually does. Whatever. Anyway, she's there. She's there. Okay, so Jolts data comes out in 7 minutes, and we'll stand by for that. CNBC is on commercial as usual. ARM bottoming out. Nvidia's trying to move up. Is Reddit really flat today? Oh yeah, look at that. Reddit just had a little pop up. 65 on BTC. Tesla's trying to break that trend now. 5.4. I want to see what other news is coming out on Tesla. Sometimes you get commentary from analysts, reactions that come out. Obviously, we saw Ross Gerber's take. He's calling for the board of directors to be replaced. Oh, he's still tweeting. I love Ross. I know like 50% of people love him, 50% don't. You might not agree with his opinions, but yeah, he's a good guy. So now the analysts will take the hatchet to 2024 and 2025 EPS estimates for Tesla. And so he's not wrong about that. So if I look at the EPS estimates for Tesla right now, Jay Glizzy, that's wrong. You should go get yourself an update. Okay, so the EPS estimate has, it did actually come down a little bit. 2.93 is the current 2024 EPS estimate. That did come down from about $3.03. And so it has come down about 10 cents, which 10 cents divided by 293, that's about 3%. I think it's probably going to come down substantially more than that. So I do think that's a likely reality, I should say. I think it's more than a possibility. I think it's likely to probable. Let's see here. Sawyer Merritt's now saying, BYD saw a 43% decline in their EV sales in Q1 versus Q4. Should their board of directors also be replaced? Well, one of the things with BYD, just in fairness, is they're killing it on the hybrid model. Absolutely killing it on the hybrid model. So at least they have this offset. You know, but that's an interesting argument. It's interesting. Praying for summer. Thank you so much, Anthony. I appreciate that. Oh, I keep moving my little Jolts banner. Jolts at 7 a.m. There we go. All right. Okay. So what other news? Let's see if there's any other coverage on Tesla, for example. We'll end up getting news from the suits, I'm sure. Always do. But that usually takes a little bit of time. Let's see. Barclays. Oh, they're boring this morning. Got 4 minutes to go, so we don't have long to go here. What is this? Oil, plenty of peaks and long global plateau. The AI transition 1 year later. On track, but macro impact still several years off. Hey, that's what I was just talking about. Macro impact. Yeah, the larger impact's going to take a little bit of time. How about, what's JPM got to say this morning? Yeah, I was kind of going through this a little bit earlier. Sometimes there's entertaining stuff. Sometimes it's boring. Construction spending declined in February. Forget resilient. Forget resilience. Consumers defiant in February splurge. I think there's a limit to how long that's going to last. I don't know about that. So, the Jolts estimates are in 3 minutes. Yeah, we'll go through that. Oh, sorry. What are the Jolts estimates? My fault. Well, it's at ehack.com, of course. I'll just read it to you. Give me 1 sec. 8730. And keep in mind, we're going to get factory orders, durable good orders, and capital good orders as well. So we're going to get some manufacturing numbers that might, you know, give a little bit of a challenge to the ISM numbers, or it'll reiterate the ISM numbers. I don't know. But again, that's 8.73. And so I would say if we got, you know, something with like an 8.6, that'd be kind of good. You know, that might sort of try to push some of our rate, you know, cut arguments again, because we're trending in the right direction. If we got a Jolts opening at like 8.9 or over 9, I think the market's going to tank. If we got over 9, I think the market tanks. It's like, get your puts ready on, or calls. You know what? That's what you got to do. You go into TQQQQ, and you get your calls loaded up, your call shotgun loaded up. SQQQQ. You got to get the right one, the short. So 1 minute to go. Yeah, you go to SQs, and then you go to like Friday. You know. Yeah. Okay, cool. So let's see what happens. All right. So again, you short, in my opinion, if you get a 9 mil plus. If it's like bang on estimates, I probably won't do much. You know, I'm gonna look for something else to trade. Matterport rolling off. Tesla's breaking that trend line. That's not great. How are the Qs moving right now? Oh, hold on. Here we go. Here we go. Okay. And the numbers are going to be out in just a moment. We are looking for we got 8756 bang on. Bang on expectations. Factory orders coming in hot, 1.4 versus 1%. You got factory orders ex transportation 1.1 versus 0.5. That's not any kind of slowing. Durable good orders 1.3 versus 1.4, pretty much in line. Durable goods ex transportation 0.3 versus 0.5, slight miss. But capital good orders ex air is 0.7 versus 0.7. Yeah, I mean this is pretty strong. You know, this is pretty bang on. It's not a big weakening. It doesn't scream, hey, let's cut. But you know, it also doesn't say like, oh, big acceleration or whatever. So, nope, no move there. But that's your Jolts job openings and labor turnover report. It's a big deal. The prior number was revised down about 115,000. So we do have a revision. So we're going to write that down really quickly here. So we got 115K negative revision for prior release. And that's, so we'll call that data out. And then we're going to go data out 8756K job openings. Bang on expectations. So again, nothing really exciting there. So you could make the argument that because it didn't come in softer, the market could trend down, but I don't think it's as aggressive of a suggestion as if this came in like super hot, right? 10-year just broke 4.4. Let's see, is that true? No, I don't see that right now. I see it at 4.387 right now, so it's tiny little bit below that. And then still on the Brent at 88. Okay, so those are our Jolts numbers. I got to make another cup of coffee and go do the course member live stream. Keep in mind, if you want to be part of the fundamental analysis or the trade alerts that I send out, when I see trades, I send alerts and I make the trade. So, like, if like, I watch these lines all day long, and if you, like, you don't have to copy my trades, ideally don't. But when I see a trade and I see something bounce on a line and I think there's an opportunity and I move on it, I send alerts to everybody in the Stocks and Psych group. What a lot of people are doing is they're bundling Stocks and Psychology of Money with the event we're doing in June. So that's June 21st to 23rd in Vegas. Or they're bundling with the Zero to Millionaire Real Estate Investing course. So we're seeing a lot of bundles between stocks and real estate right now. The other one that's doing well too is the Gold course. That's sort of the efficiency, productivity, you know, how does Kevin get so much done in a day sort of thing, but like how you can apply that in your life, and that has some of the AI stuff in it as well, in terms of, you know, some of the favorite AI tools. So check those out over at meetkevin.com. We did extend the coupon to Friday, and let's go ahead and push the button.
Go yourself. Oh. Is that clear?
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. So there you have it. Super microcomputer down about 3.5%. Is trying to recover. You are trying to get some dip buying, it feels like. On markets right now since about 9:44. You've had a slight uptrend here. You bottomed out on BTC. You bottomed out on Nvidia, for example. You bottomed out on Apple. You bottomed out on Tesla. So it feels like the bottom's somewhat in. The real question is going to be what happens at the end of the day. Are we going to see fund flow in or out? So that'll be really interesting as the bond market does warm up a little bit. Thank you so much for being here, everybody. Really appreciate you. And we'll see you in the next one. Oh, also, the poll result. So we got 13% of you said just post normal videos out of 2,599 votes. 79% of you said yes. 8% of you said no. Okay. Interesting. Well, the market has spoken. All right, folks. Thank you so much. We'll see you in the course member live stream after I pour another cup of coffee. Bye.